Hello everyone, this is monthly fixed income update by Bajaj Finserv Mutual Fund. This month, global trade tensions have eased somewhat following a series of positive developments. The US and China have agreed to a 90-day truce with the larger than expected tariff cuts. The US and UK have also announced a trade deal. Trade negotiation between US and other countries is underway. While US tariffs are expected to stay above the level seen before the second Trump regime, they are likely to be lower than the market fears. This has eased the global growth concerns. In response to this, Asian currencies have generally strengthened by a weaker dollar. The budget reconciliation bill in US and weak demand at recent auctions have also put pressure on the US long-term yields. In Japan, government bond yields have risen due to elevated inflation and unwinding of ultra-loose monetary policy. However, there was a drop in longer yields in Japan after government there is reconsidering the size of issuance for the long-term bonds. In India, RBI has infused serious amount of liquidity this calendar year in form of OMOs, FX swaps, long-term VRRs, resulting in banking system liquidity turning positive. In response to this, India's sovereign yield curve has moved down with continued liquidity infusion by RBI, especially with tools like OMO purchases. This was further aided by RBI giving a larger dividend and expectation of rate cuts. However, all along this, there was some curve steepening bias which came to fore along with expectations that we are near to the end of the rate cut cycle. Finally, as we started the new month, Monetary Policy Committee delivered surprises on three fronts. First, it executed a 50 basis point rate cut, exceeding market expectation of a 25 basis point reduction. This move aims to support economy amid the trade uncertainties and easing inflationary pressures in India. Second, the MPC shifted its stance from accommodative to neutral, with the governor emphasizing that the future rate actions will be guided by the incoming data. Third, a 100 basis point CRR cut. Prior to the policy announcement, we had highlighted a strong likelihood of an overall 50 basis point rate cut, noting that any further easing would depend on a significant deterioration in global growth and trade conditions. With this decision now, short to medium-term bonds are expected to perform well, supported by substantial liquidity following a CRR cut. With this cut, the core liquidity surplus is now projected to be around INR 8 trillion. However, as we near the market expectation of the terminal repo rate, the profit booking is evident in the longer term bonds. Also worth noting that pre-policy real interest rate of 2% was relatively high, especially in context of the heightened global uncertainties. Given the domestic growth inflation dynamics are more accommodative, stance was justified to sustain the economic momentum. The inflation forecast for FY26 has also been revised downward from 4% to 3.7%. Now the real interest rate stands at 1.8%, which still is elevated. Going forward, additional rate cuts will only be feasible if inflation projections decline further in upcoming policy reviews. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.